Welcome to the Uncontested Investing Show, presented by REI Inc. magazine and sponsored by RCN Capital. Each week, we focus on bringing you candid convos from the best in the biz. Here's your host, Tim Harridge.
Welcome back to the Uncontested Investing Show. I'm Tim Harridge. Thank you so much for stopping back by. Today, I've got my good friend, Dylan Tanaka here. Dylan, thanks for being here, buddy.
Yes, sir, Tim. Super excited to be here. It's been a long time coming, and I finally get to be in studio and chop it up with you.
Well, Dylan, why don't you just take a minute or two, just tell the listener a little bit about yourself.
Sure. So I'm from Metro Detroit. That's kind of one of my famous sayings. I've been investing in real estate for close to 20 years. I've done everything from single families to multifamily to borrowing money to lending money and basically everything in between.
So I start every segment every show with a segment I call the bottom line up front. So when I was in the Marine Corps, if we were briefing the general, they always taught us to lead with the most important thing in case the heat had to get up and leave or something. So what I want you to do is just take 2 minutes and just talk directly into the audience. What are some things in today's market they should be focused on, they should be paying attention to, things they should be trying to do, maybe some things they should be avoiding. 2 minutes, just give the audience the bottom line up front. You
Okay.
ready?
Ready.
Go.
Well, Tim, I'll tell you this. I think the most important thing that new investors need to learn about and be very careful is leverage, right? When you get over leveraged, that's when you get in trouble. And today, right now, we might be moving into a bit of a real estate shift. Everyone's talking about it. I haven't quite seen all of those numbers come through, but since I've been around long before the foreclosure boom and then after those days, I know what happens if you get over leveraged. So I would say that's lesson number one, is make sure that you don't get over leveraged. It's easy to do, especially if you're good at finding lenders or private money. But the second most important thing I would say is you have to be able to be nimble. And Tim and I, we talked about this, right? The last time we sat down, and you have to be able to look a lot of different directions. And business today is not just one way. So I've been in the business 20 years, and I've done almost every segment of single family investing and a little bit of multifamily. And it's because the market forced me to do that. And if I wasn't able to shift myself and to be able to pivot and to do different things, partnerships, taking on my own deals, working things out, like I said, with private lenders, all those different aspects of real estate investing, you're gonna end up failing.
Man, that's great stuff. So let's talk about that. Obviously, I'm a lender, and we got to where we were really pushing some 80% loan to value products. I think the industry as a whole kind of pulled back from that a little bit. What do you think, if someone's business is built on max leverage, what are some symptoms that may be diagnosing?
Well, I think it's weakness is what it is. If you can't create organic cash and you lean on your lenders to bring that cash in and you don't have any real air, and most entrepreneurs will tell you this, right? Not just real estate guys, cash flow is air. You have to create that cash coming in. So if you're leaning on those lenders and always using their money and not having any of your own, there's no cushion. And we're in Dallas right now, but we're talking to people worldwide, and every market's different. But it's the saying that I always say, when the tide goes out, they're going to see who's not wearing their bathing suit, right?
Right.
Because it can get tough. And I don't ever want to sound negative, but I just want to be real, because we all want to be in this business. I want every single person to be successful. So do you. Because the better you're doing, the better they're doing, the better we're all doing, because that rising tide lifts all ships, especially just as real estate investors, right? So I think it's hugely dangerous to be over leveraged. And I think that as a newer investor, or even someone who's been in the business a long time, you've got to learn how to use your own cash or bring that in somehow.
So in Metro Detroit, I won't say what are you seeing, because I don't want you to have to feel like you have to have a crystal ball, but what are your areas of focusing? Because you're a hybrid agent and investor, right? So you kind of play on both sides of the closing table, both as the advisor and the executioner, so to speak. What are you personally focused on right now?
So I kind of shifted myself a couple years back, and I said, you know what? This market has been crazy, especially in Metro Detroit. We were talking about Jimmy Kimmel earlier, and And Johnny Carson kind of tells our age. He's a lot older than me. Actually, I'm older than Tim, but we were talking about the late night guys, and Detroit was the butt, right? The end of the butt of the joke, however it was. So the city itself is better than it's been my entire life and probably halfway through my parents' life. So I see values going up, and I don't think that even in Detroit or nationwide we're going to have that crazy slide that we did before, because you and I both know it's much harder to get qualified. It's not really hard, but it's a lot tougher than it was 15, 17 years ago.
Right.
So I see values kind of staying the same. You know, as a broker, I have a team of 20 or 30 agents underneath me, and they work more with investors just like I do. So like you said, I play that line. But the thing that I see is if you're coming out too high right now, unless you're in the hottest markets, which Salt Lake City is supposedly one of the hottest markets in the whole nation, and they've slid. So Detroit's going to slide, Chicago's going to slide, Dallas is going to, just cool down a little bit. So I think you have to learn how to be realistic and not think that, you can just have a scratch-off ticket and win.
You and I are both in the Investor Fuel Mastermind.
Yes.
And I always enjoy hearing your perspectives and kind of the way you're able to refocus people back in. And there's so much perspective. It's easy to be positive when the entire market is swinging up like the pirate ship ride at the fair, right? Like it's just, wow, there we go. But what do you do? What do you focus on when it reverses course? Maybe not all the way. I'm not saying we go all the way back to the bottom, and I'm not saying we go all the way the other way, but there are markets, San Francisco, Salt Lake, some parts of Phoenix, price bands in Dallas even, that are getting a little, I wouldn't say dicey, but frothy.
Absolutely.
So
That's my
how
term,
do you change your
frothy.
focus when things aren't going exactly your way?
So I always tell people you got to roll your sleeves up and get to work. And I think, again, the last 5, 7, even 10 years, a lot of guys and gals, investors, they haven't had to focus, right? They aren't building their business. They just know that they can, we talk about wholetailing, right? So for the audience, if you don't know what that is, you buy a house, you list it and sell it. You do almost no work to it. Not to say that that's a bad business model, but that really only works in certain cycles, unless you're really lucky. And you can't make money being lucky all the time, right? So I think that you have to build a business that's a business and not a hobby. I think you have to have deep networks like you have, 15, 20 years in the business. You've got guys and girls you've been friends with forever, connecting them constantly, giving more than you're asking for, and then all of a sudden, wham, it comes right back around to you. And I think relationships are really important. And to be able to pick on the younger generations, they don't know how to get belly to belly like this.
Right.
And build things, and talk about, hey, my buddy Tim, I hear you all the time, at Investor Fuel especially, connecting people with some crazy guy in Florida who's doing this, or this lady up in Minnesota, and it's like, how does he know these people? But you're listening, even though I talk a lot, you talk a lot, but we both listen really well, because if we can't listen, then we can't help people. And the more we help people, the more that comes back to us.
So we're going to take a quick break, but I want to come back, and when we talk, I want to talk about being an intentional listener, right? And active listening, maybe changing your focus. I love what you said about rolling your sleeves up, getting dirty, maybe honing some of your skills again. And then we'll talk about kind of the teamwork mindset and how people can make more money. All right, so stick around and we'll be right back.
Are you looking for fast funding for your next fix and flip? What about leverage for your next long-term rental or vacation rental? Need capital for a new construction project? Look no further. RCN Capital has you covered. As the leading nationwide lender for real estate investors, RCN Capital offers short-term and long-term financing solutions for your next investment property. RCN Capital takes a common-sense approach to your loan request, offering high leverages and low rates backed by superior customer service. Whether you're investing in single-family properties or multifamily properties across the U.S., RCN Capital has funding options for you with no hoops to jump through and quick closings in as little as 2 weeks. Ready to get a quote for your next investment property? Visit rcncapital.com/podcast to apply today. There is no fee to apply. Again, that's rcncapital.com/podcast to apply today.
Welcome back to Uncontested Investing. I'm Tim Harridge. I'm still here with Dylan Tanaka. He hadn't left yet. So Dylan, I want to dive right into being an active listener, because I think it helps when we're buying these houses at the kitchen table. It helps when you're at a networking event and You hear someone with a need, and if you can solve that need. So why don't you, and you're an agent, right? So you got to like really just dial into what the customer's looking for. Why don't you just tell me some of your tips and tricks for being an active, attentive listener?
All right, I got a secret trick, so we can't let everybody hear this.
I won't record it.
I've been through a lot of seminars like you, lots of sales training, and I've been doing sales training in front of audiences for like since I was 20 years old. So it's been like 30, 40 years now, right? So you almost have to be an actor, but it's more than being an actor, right? Like you said, you have to be an active listener. So in your head, I'm very ADD or ADHD, whatever that is. I'm drinking coffee, having fun. I'm thinking about what we're going to do after this. But for me to focus, I have to almost create sometimes acronyms in my head, or like you being in the military, you guys had like check downs in your own mind, especially if you had a brain like mine. So for me, what I teach, and I've stolen this from other people, is FORM. If you ever heard that, or FORM.
I haven't.
So it's FORM. So I'm going to see you at a networking event. We already know each other, or maybe we don't. So first thing is family. Hey, Tim, how's your wife doing? You know, she's the brains behind the operation, right?
Absolutely, yeah.
Right, and I'm always joking with my guys,
Yep.
too, you know, even ladies. But you got to be careful, you know, nowadays people are very sensitive.
Yeah.
But I don't have to be super sensitive with you, right? So family, right?
Yep.
Occupation. So what's going on, man? You know, how's RCN doing? Like, what else you guys got going on? What are some new products? Where are you guys at, right?
Okay.
What are you moving into? Next is recreation. So with those boots on, you do a lot of bull riding, right?
More horseback, but.
But right, so recreation. So what do? Do you golf? Do you sail? Do you boat? When you're hanging out with successful people, whether it's at the cigar bar, right? Whether it's at different networking events, downtown, wherever you live, at some of these high rises, going out to exciting things. So recreation, what do they like to do, right? Then M is the motivation. Okay. So the motivation is, what are we really trying to do here? But I eased into it. So I didn't, you don't come up and go, hey, you need some money? Like, because that doesn't work. So what do you do?
Well, I'm always like trying to talk to the RCN reps. It's like, hey, we're not underwriting deals in the trade show, right? Like, we're just trying to make friends. We're trying to make people like us, right? I mean, and people, what is it? The how to win friends and influence, right?
Yeah.
The number one topic people like to talk about is themselves, right? And the thing they like to think about the most is themselves, right? So if your form, right, is family, occupation, recreation and motivation,
right,
gives them the opportunity to talk about themselves.
Exactly.
And think about themselves.
And even if you're humble, you can drag it out when you talking to guys about their family. And today, if I had my phone, you could look in social media. 99 out of 100 people that we meet are going to have some type of a social media presence. So you can do a little bit of recon. I'm not saying get weird, but
no stalking.
No stalking, no cyber stalking. But I've taught guys specifically guys at Investor Fuel this, and I said when I come to Investor Fuel, this was more in the beginning because I've been in 4 years, so I know almost everybody except the new folks. But I would have a checklist of who I wanted to talk to and different things I wanted to do. So I got to get 3 selfies today. And people are like, well, that's silly. Well, that's okay, because I got your address. I'm going to send you, a picture card of us doing a selfie. And your wife's like, who's that guy? You're like, my buddy from Detroit. Next time I'm going out that way, I got to let him know. Even if I'm like flying into the airport and flying back out, because no one wants to hang out in Detroit with me, right? But in all seriousness, when you do those things and you show people that you're thinking about them before yourself, now it just opens that door to do more business. And I think when you're sitting down, more importantly, at that kitchen table, you gotta learn how to ask questions. And it's not like it was 20 years ago. During the foreclosure days, I'm not a hard closer, but I would sit there with my $100,000 check and it was written to the title company. And you're like, I'm not taking less than 101. What did I do? No problem, Tim, you just bought your house back for $1,000. Have a great day. But there was a million people like that, and you had the hard close because the sheriff's sale was right there. Right? So it's not like that anymore. Now it's like, what's this house doing to you, really? What is it worth? Is it worth coming here every Saturday and mowing the grass? You can't go to your kid's t-ball game because you have a crappy rental house? Is that what you want? You made a bunch of money in cash flow anyways. Why don't you just get rid of it at this point?
So, like, you literally just worked the recreation and the motivation component into that statement, right? Like, you literally just, don't you want to go to the Little League game instead of mowing the grass? That's funny. So I'm actually going to completely shift gears here because I do want to come hang out with you in Detroit, but not actually in Detroit, about an hour and a half north of Detroit on the big freshwater Great Lakes.
Mm-hmm.
Because I don't know if you know it, but in the summers in Texas, like you can cook a steak on your
right?
And What is that market doing right now? Because I've been seeing like a lakefront home for $450,000, which just seems like it should be more than that.
So I think that if they're on the big lakes, if they're 2,500 square foot or bigger, they're almost all going for 6-ish now at least, because we have Airbnb buyers coming in from around the nation. So there's guys that you and I know who have been kind of like dancing around this for a few years now, and they're going to the Minnesotas and the Michigans because, again, at $450, it's a steal. Because I have a lot of friends, I don't have any Airbnbs on the water yet. I have plans to have them, but I'm late to the party. So the only way for me to get deals is to buy direct. And today, the market's hot, so I'm not going to waste a bunch of time buying direct with those guys because I'm not focused on that. However, friends of mine are getting, $750 a night on the big nights. So do those numbers.
I do. I just did them.
And winter's tough.
I can't let my wife listen to this episode because every week she's like, look at this one, and I'm like, no.
The cash flow is amazing. The winter's tough in states like Michigan and Chicago, up in Illinois and Minnesota, like I said. But in the summer, it's so hot there, right? So exciting. And I think the baby boomers and maybe even the Gen Xers, which, I still think that I'm a young Gen Xer. And I am actually, right? So I am a young Gen Xer. But instead of coming down, everybody from Michigan goes to Florida, right? That's just where we go. We don't go to California. It's too far away. So instead of taking these family trips now and flying all over the place, the pandemic has scared people, whatever your belief is on that. I'm not worried. I just flew down to Dallas to hang out with you, right? But think about this. If you can drive an hour away, you can have a 3,000 square foot home with 6 bedrooms. It's on a Great Lake. Those Great Lakes are like 40 degrees until July. I mean, they're big, big, big bodies of water. You can have your whole family there within an hour. People can come in and out, and it's kind of going back, and I like this too. It's going back to like that Americana versus just going to like, I'm going to Cancun and getting stupid. It's like now you get to spend time with your friends and family.
So you and I know a lot of Airbnb investors. One of our good friends, Kevin, is going to be on the show soon, and he's RCN borrower, and we just love what he's doing. But how sustainable is that? Do you think more and more, do you think that becomes like a larger investor play or more family and friends pooling their money together? What are you seeing up there in those Great Lakes area?
So the homeowners associations are a big problem. I don't like, this is something I've always said, when you're playing in somebody else's ballpark, this is being nimble, right? You got to be able to play every position. So if the state of Michigan says no more Airbnbs, you're toast. Right. If they want to throw on an 80% tax because, I don't know, does our government like to tax us? You never know. And in a lot of different, I don't know all the municipalities, but I know people are telling me there's basically like hotel tax on Airbnb now, right? Yep. So that's what scares me. But what doesn't scare me is in the Midwest, and even say down here in Dallas, if there are lakes in Dallas, if you could have a home on a lake, people want that forever. They want water. There's something about us humans and water, right? Or mountains. Yep. Kind of like you're either a beach person or mountain person, they say. But now you have an asset that's $500,000, $600,000 that's bringing you in a break even, let's just say on a 30-year mortgage. It's a lot better than having 3 houses along like 8 Mile Road. You guys know the Eminem song, right? 3 houses just bordering Detroit that you're always going to have just Section 8 tenants in. Yeah. What is that asset worth, really?
Right. Yeah, one of the powers of this business is you get the cash flow, you get the tax benefits, you get the appreciation.
Which we never bank on in Metro Detroit.
Right.
We never bank on appreciation.
Yeah, I mean, so it's like, I always refer to owning investment property as it's like an inflation-indexed annuity stream with an underlying asset base that appreciates, right? And even though you don't bank on appreciation in Detroit, you've had appreciation.
Sure.
Right? I mean, I think replacement cost alone dictates that the existing real estate goes up. So we're going to take a break in a minute, but talk about, I see you coaching and mentoring and doing a lot of accountability calls with Investor Fuel and other investors and doing sales training. Why don't you just spend a couple minutes telling me the things that you're seeing some people doing right and wrong, and maybe some trends that you find exciting and or disturbing?
Okay. So here's what I think. I think that that the market has been crazy, right? So everybody's a genius. I talk about these young guys. I don't even have my watch, but I've got I don't even know what it is, a Citizen Echo Drive that I've been wearing to foreclosures for 10 years, right? Cost me a few $100. So I don't have a Rolex. I don't drive a big Mercedes. I think that you have to be prudent. And I'm not talking about the guys who have 9,000 houses. I'm talking about the guys who have just made their first few big deals, right? It's really exciting, but they're not building upon, they're not growing, right? So they're looking at the watch and like, listen, it's nice to have a nice watch. It's nice to be in a Mercedes, there's no doubt. But wouldn't you rather have a bunch of cash flowing assets in our very, very early 40s, right? Versus our late 20s, you know, and you talk about Kevin Lee. Kevin's got nothing but assets that kick off cash. He loves that stuff. So you look at that and you go, okay. So my fear is that the Instagram all-stars, what I call them, and I love it and I hate it because there's so many 15, 16, 17-year-olds, which is wild, coming to our events, our live events, and they're like, I want to flip houses. They're riding their bikes to go driving for dollars. You got to love it, right? I mean, it just, like, it does really warm your heart. But sometimes when they get that money too quick, it doesn't even mean the young guys, but the ones who are newer in the business, they're not really building. Because some of the, you know, what's the biggest mistake you ever made in real estate? Not keeping as much of it that you could have. Yeah. I've owned hundreds and hundreds and hundreds of properties, right? I'm not sitting on a lot right now because I had to churn and burn, right? Yeah, I had to eat.
Feed the beast.
I had to eat, you know? So how do we teach the new investors to try to keep as many assets as they can, especially, again, going back to Airbnbs? I could have bought those things for $250 a decade ago. Yeah. Now they're $600.
Well, I literally have houses that I still own that if I sold them today, the sales price would be approximately 700% greater than I paid for the asset.
That's big, right?
I mean, we've got houses in Mesquite, Texas, that we paid $40,000 for that are worth $350, $360.
Yeah.
I mean, it's just insane. But it's not, because actually, if you go back and look at the history and the math, and you know I'm a big fan of stats.
Sure. Yep.
Right? Like, it actually is very consistent. It's because it's compounded, and people don't understand the compounded nature of appreciation. It's not straight line, it's compounded. When it compounds, the rate of growth has to continue going up because it's stacking on top of more every month, right? So we're going to take a break. We're going to come back, do the Money Minute, and then I'm going to dive into rapid fire. Stick around. We'll be right back.
REI Inc. is a monthly business publication for real estate investors, covering all types of real estate investments and strategies. It is the most comprehensive real estate investment publication on the market. All of the articles are written by the top leaders in the industry, so investors are assured of always getting the best information possible. Each month, REI Inc. also profiles the top companies in the industry and provides insights and data into key regional markets. Along with their sister platforms, the REI Referral Network and Highest Invest, real estate investors have exclusive access to off-market investment opportunities and national acquisition and disposition initiatives. To learn more, visit www.rei-inc.com, where you can also access the REI Referral Network. Also, be sure and visit www.highest-and-best.com to view the latest exclusive off-market assets with near immediate acceptance decisions and closing strategies. You can also email marketing@rei-referralnetwork.com to request more information.
Welcome back to Uncontested Investing. Tim Herridge here. I'm still here with Dylan Tanaka. Dylan, I like to start this segment with something I call the Money Minute, and I've found that it's just one of my favorite parts of the show. Imagine there's an investor out there, and they're only going to get 60 seconds worth of advice all month. This is it. This is all they get to hear. After this, they're shut off to the world. They have to go operate their business. So think about it. You've got 60 seconds to impact someone's life and business. Are you ready?
I'm ready.
Go.
I tell you this, Tim, the most important thing that I can tell any new investor is, number one, I truly believe that all real estate investors should have their real estate license, or at least someone on their team should have their license. Almost all the states now are talking about legislation where they're going to force wholesalers to have a real estate license. So that's number one. Number two, you can make a lot of money in commissions. Number three, you stay in control of the transaction. That's super important. And number two, the first thing you should do as a real estate investor, and even if you've been in the business a long time, is you should be looking for private lenders at every single turn. If you have money for deals, deals will find you. But if you only have deals, you're going to have to give up more equity to get the funding to put those deals together. So those are my two best tips. Get your real estate license and hunt for private money lenders all the time.
That was really good, because I think a lot of people don't understand how important money is in this business. And even though you started off the show by saying they need to have their own cash, that should never be enough. I don't think either of us think that they should have enough of their own cash sitting around that they can fund their entire business, right?
Correct.
And I tell people all the time, it's like, you don't want to look for money when you need money, right? When your bank account's empty, bad time to talk to a new lender, right? But so you always look for money when you don't need it. So I love the advice about the private lending. Now, I never got my real estate license. I just married a realtor.
You had a hard time with the test?
Yeah.
Right.
No. So we're going to go into rapid fire, Dylan, and I've got some questions I want to run by you, and just try to keep your answers short and your temper shorter, all right? Here we go. So are we in a bubble?
Yes.
Is it a price bubble or an affordability bubble?
I think a little bit of both.
How high do you think interest rates get?
I think that we're going to see high 7s.
Ooh, on the 30-year paper?
I think so.
Okay. You think that would be this fall or winter?
I mean,
fall, this year or next?
We have an election coming up in about 2 years, so I think it's going to happen before that. So in less than 2 years.
Do you think, since I go around telling people they got to pay attention to replacement cost, I kind of consider it the low comp. Do you think that this bubble will affect all price bands or just the high-end stuff?
I think it'll affect anything over that $200 or $250 mark, where that has become now the new first-time home buyer price.
So how do you solve the affordability crisis that we're in?
You have to force savings, which is basically impossible unless you raise interest rates like crazy. Nobody saves anymore.
You know, it's funny. Today I was looking at a stat this morning. There was only one red arrow of the month-to-date data from the National Association of Realtors, and it was the net new listings, down 24% year over year. So less people are selling, less people are buying, but the net new listings are still going on the market at a rate of 13% higher than this time last year. So prices are going up and inventory is actually staying below normal with less new inventory coming on the market. Which wins, supply or demand?
I think that's what's saving us, and there's this talk about these student loans. I think that pushes more money into the market. I'm not big on stimulus because, again, I think that's artificial, but if it goes another 40 years, you and I are going to smile.
Yeah, 40 years. You think the solution ends up being 40-year mortgages?
They've been 40-year mortgages in Canada since I've been in the business, right?
Yeah.
So what do they care about? They care about the payment. That's it.
So if we have high interest rates coming and if we have a bubble, where are the opportunities for the customer or for the investor?
For the investor, I think if you can figure out seller financing, I think that's always strong. And there are a lot more paid off houses and low equity, high equity houses than most people think. We know that. I think you're going to have to hunt. I think, unfortunately, some of the new people are going to go bye-bye, as that always happens. And I think you're just, like I said before, you're going to have to roll your sleeves up and you're going to have to look at it and learn how to be more creative. And not just because that's sexy now, because I started when it was creative. But everybody wants to be creative. But I'm saying that you put a deal here, and between you, myself, and 4 other guys and ladies, we can figure out 20 different ways to do that deal.
Right.
Instead of just saying I have to pay cash and I can close in 3 days, because that doesn't work all the time.
So what's the number one mistake you've seen an investor make in this business?
I still go back to leverage. Biggest mistake that I ever made before the foreclosure days. I was under 30. I had over $1 million in equity. You know, I felt pretty good about myself. I wasn't buying the Rolex yet, but leverage will kill you. And you have to create some type of residual income. I don't care if that's from rentals. I don't care, again, if it's from selling on seller financing. You have to figure out a way to bring in organic cash with the least amount of effort from you.
You know, I was at a conference last week and someone was complaining about how he's able to burr all of the money out of the houses where he's in these things for zero down, but they don't make money. And I was like, well, no, they don't, because you're taking all of the equity out of it.
Sure.
Now, they make enough money to pay the bills, right, in the mortgage, so it's an investment, but you're not going to live off of it if you're burring every dollar out. So the biggest mistake you ever made was over-leveraging. What's the best thing you ever did in this business?
I think the smartest thing I've ever done in this business was build my relationships. I spend a lot of time on them. I give more than I take. So eventually that comes back to me. But you have to be willing to sacrifice. You know, and it's the same thing if you're building rental portfolio. It's the slow man's way to becoming a millionaire, even part-time.
Right.
But what about those guys and girls, again, that we know who've stacked up just hundreds and hundreds of homes, people we talked about today before the show.
Yeah.
Now look what they're doing.
Yeah.
And it was really I have a good friend who's got 100 or 120 units now. It was really unsexy because I was flipping and I was taking $40,000, $80,000 houses and turning them into $700,000 rebuilds. And I was a star. And you make 80, 90 grand, which isn't a lot. And looking at how much that you're putting into that, a lot of risk. Where's that 80 or 90 grand now? Went into the next deal. Right. But my guy, right? He was buying those for 40, 50, 80. Now they're worth 200 and they're shedding 1,500 a month. And he didn't take any cash out.
You know, I think the most common theme of all of our guests so far has been delayed gratification.
Yeah.
I think that's just, I think that's a good way to end this one. So Dylan, parting thoughts, parting shots?
So I would just say, spend more time building relationships, again, with private lenders, with possible JV partners, and just treat this business as a business and not a hobby.
So I like the relationship part. You keep saying that. And, I love your form approach to networking. If someone wants to connect with you, what's the best way to reach you?
They can obviously find me on all the socials. I am luckily the only Dylan Tanaka around, but I put something together just for our watchers and listeners of the show. So they can go to www.thedylantanaka.com. I've got some cool stuff on there for them.
Very good, very good. Well, Dylan, thank you for being here, man. It means a lot to me that people take time to sit down and talk with us. So thank you for listening. Thank you for stopping back by. Remember, your network is your net worth, and today you've been growing both. We'll see you next week.
Thank you for listening to Uncontested Investing. Questions about today's episode or the podcast? Email podcast@rcncapital.com and make sure to follow REI Inc. magazine on LinkedIn and Facebook, and RCN Capital on Instagram, LinkedIn, and Facebook. See you all next time.